Why homeowners are giving up low mortgage rates in 2026. Hey everyone, I'm David Hiddle. I'm doing business at Shop Kentucky Homes LLC. I could be your real estate specialist, and I work with United Real Estate Louisville. Today we're talking about a trend that might seem surprising: why more homeowners are choosing to give up their low mortgage rate and what that means for you in 2026. So, whether you're thinking about buying, selling, or you're just watching the market like me, understanding this behavior helps you make smarter decisions. So, if you want real, practical insight into real estate, not just the headlines, hit that like button and subscribe. Let's dive in. First, it is the perception of a low rate versus financial goals. So, for many years, especially after the ultra low artificial rates of past years, homeowners who locked in those rates felt like they had something that was untouchable. It makes sense. Low interest equals low monthly payment. Predictability equals financial peace of mind. Affordability equals immediate savings. But as we moved into 2025 and now early 2026, the market and personal goals have started to shift. Some homeowners are realizing that staying in a home just for the low rate might not align with their long term plans. And that's a fundamental reason why more sellers are willing to give up those rates, not because they want a higher payment, but because their overall goals have changed. So, in other words, life changes have driven real decisions. The biggest driver is not the interest rates, it is life changes. And here are some real life examples of what people are navigating: job relocations, growing or shrinking families, the desire for space, the need for less maintenance, retirement moves. So, when someone's life priorities change, the benefit of sticking with a low rate can pale in comparison to buying a bigger home or better located home, moving closer to family or work, upgrading to fix long-term problems, or planning for aging in place. So, in other words, it's not just a financial decision, it is a lifestyle decision. And then comes economic realities and equity considerations. This is another piece of the trend. Homeowners have built equity, and sometimes significant equity. So when that happens, selling becomes financially feasible. They can pay off that old mortgage and they can use the equity to buy something that better fits their current needs. So even if the new rate is higher, the net value of a move can still make sense when the new home is a better fit, the current home's equity funds the purchase, or long-term lifestyle or health reasons outweigh rate concerns. So it's not about abandoning a good financial deal. It's about making the best overall move for their life and their long-term goals. So here in the Louisville, Bullitt, Shelby, and Jefferson County markets, we're seeing this manifest in specific ways. We are seeing increased buyer activity in that mid-range price bands. Homeowners with low existing rates are moving into homes that better suit a larger family, modern floor plans, or updated features. We're also seeing a rise in relocation. Some are moving because of job changes or family needs, and that is pushing more transactions in our area. Others are equity driven moves. Homes that sold through 2025 and into 2026 have created enough equity that moving isn't just possible, it's financially smart. So while it looks like people are giving up great rates, they're often replacing them with better overall situations. So what does this mean for buyers and sellers in 2026? Well, here are the key takeaways. Firstly, for the buyers, don't assume homeowners with low rates won't sell. Many will if the move improves their lifestyle. More listings can mean more options, especially in desirable areas. And for sellers, you are not captive to your current mortgage rate. Your equity and needs matter too. So homes priced and marketed strategically can attract buyers who don't worry about rates as much as they do about location and features. This trend actually increases opportunity in the market. More motivated sellers mean potential movement, which can help buyers who are waiting for more inventory. So if you are watching the 2026 housing market, like me, and wondering why some homeowners are choosing to sell even with those great rates, it's no longer a mystery. They are weighing equity, lifestyle needs, space and function, long-term financial goals, and they are choosing what's best for their lives, not just their interest rate. I am David Hiddle, doing business as Shop Kentucky Homes LLC, your real estate specialist with United Real Estate Louisville. Drop your questions in the comments below. I read and respond to every one. And thanks again for watching, and I'll see you in my next update.